Markets took quite a hit with the announcement of the Omicron variant of COVID, and I think this is a good point at which to take stock of what we do and don't know about the new variant, but also the market impacts so far and what the likely economic impacts are going to be, because that'll determine the more long-term effect on markets. But I think it's also interesting to talk about the end game for where this pandemic is headed. So let's look at the Omicron variant in a bit more detail. Let's start off with what we know. This variant has really only been documented for 1 month as I make this video. The first known confirmed infection occurred on the 9th of November. That's when the sample was collected in South Africa. And to its credit, the health agencies in South Africa were very quick to report this to the World Health Organization. And then it didn't take long for the World Health Organization to declare this as a variant of concern. And that's when it got its moniker, which is Omicron. The business end of the virus is called the spike protein, and that's how it gets into our cells, by binding to one of our proteins called ACE2 and then gains entry into the cell, as you can see in this diagram beside me. There's a great website run by Emma Hodcroft which shows you all of the latest variants, both in terms of their mutations, but also where those mutations occur inside the proteins of the virus. So for example, if you click on the Delta strain here, you can see the defining mutations for that variant, but also which protein they occur in. Now they already have Omicron on this website, so it's the sheer number of these mutations, but also where they occur, which has people worried. In this tweet from Jeffrey Barrett, he's actually labelled all of the mutations in Omicron and he's colour-coded them in terms of how worrying each mutation is. The ones which are in red are already seen in other variants of concern. Mutations which are orange haven't previously been seen in variants of concern, and the ones in blue have rarely or never been seen before. So as you can see, the sheer number but also the positions of those mutations is what has people worried. Lots of the mutations are in that spike protein, and that's likely to affect the functioning of this variant. The Covariance website also shows you the prevalence of each of these variants in each country. Now beside me here you can see South Africa, and Omicron is just starting to show up in this purple colour. The Delta variant, which has been dominant for some time now, is starting to subside as Omicron kind of takes over. But this is still very early days, and the number of cases is still very limited, but growing very rapidly. But as we've learnt from previous variants, containing them is almost impossible. And this one has already spread outside South Africa. Cases have been recorded in the UK, but also Hong Kong, for example. Now let's consider what we don't know. For example, is this virus more transmissible than existing variants like Delta? The fact that it's growing so quickly in terms of cases in South Africa certainly suggests that might be the case, but so far we just don't know, and it'll probably take at least 3 weeks until we have a better understanding of that. We also don't know whether existing vaccines or previous infections confer immunity against the new variant. And finally, and possibly most importantly, we don't know about the severity of disease caused by this new variant. Anecdotal evidence suggests that it is going to be more mild, which would certainly be good news, but we don't know that for sure. Now let's consider the market reaction so far to the announcement of this new variant. Unfortunately, the announcement coincided with Thanksgiving in the United States, and that was a time when the liquidity in markets, that's the trading volumes that we'd see, were very low. And in that kind of environment, a shock to the markets in terms of news like this variant has a bigger impact. So the size of the sell-offs that we saw were quite considerable, particularly for energy, with the logic being that if we are going to see further restrictions in terms of travel, then that's going to reduce demand for oil. But if we look at the sell-offs in developed markets, they certainly weren't huge. So for example, the US sold off by about 2%, if we look at the S&P 500, and the Nasdaq also sold off by about 2%. But hidden underneath that 2% sell-off was a big difference in sectors. So for example, the energy sector and the financial services sector were the most heavily affected. Those fell by about 4% and 3.5% over the course of one day. Whereas defensives like healthcare and telecommunications held up pretty well. But even before this announcement, markets were starting to lose steam. Some of that euphoria that we've seen since March last year was starting to peter out. You can look at various signs of that. For example, the IPO index, which is usually a measure of market buzz, had also started to tail off, but so had expensive tech stocks, which seemed impervious to concerns about valuation up to this point in time. Then we got this very sharp sell-off on November the 26th with the announcement, but since then we have seen something of a relief rally, but we're probably going to see a period of volatility as the news ebbs and flows again as it did in March last year. And Goldman shared this interesting factoid, which is that if you look across many different asset types and currencies, most assets move by more than 2 standard deviations. A standard deviation, remember, is a typical market move. So make no mistake, this was a shock which reverberated through many markets across the world. If you want to learn how to react to market news like this in terms of your portfolio, then why not sign up for our Patreon community? That way you get to ask your specific questions, which I then answer in the form of a video, which is only available to members. You also get access to Slack, so you can learn from me and other members of the community. To learn more about that, just click on the link beside me and in the description below me. But if we look at the likely economic impact of this variant, I think it pays to remember that this is not 2020. In 2020, we didn't even know whether it was possible to create a vaccine that would be effective against COVID. In 2021, we have multiple vaccines, and while those vaccines may not stop infection with a new variant, they might at least reduce the severity of the disease. We also now have a very new tool in our armory against viruses, which is mRNA vaccines. And these can be modified very quickly to stop the new mutations in the new variant. So for example, here's the chief medical officer of Moderna, who said in an interview on the BBC that even if they have to create a brand new vaccine, it could be ready in early 2022. And in fact, they've already started development of that vaccine. But even the CEO of Moderna, Stéphane Bancel, doesn't really know whether existing vaccines will be effective against this new variant. He says there's no world, I think, where the effectiveness is the same level we had with the Delta variant, and he admits that we just need to wait for the data. The other thing to bear in mind is that people's tolerance of lockdowns has certainly reduced as time's gone on. So I think it's unlikely that governments are going to impose punitive new restrictions without very good cause. So for example, here's a Twitter poll from Martin Lewis, who's very popular in the UK. He talks about personal finance, and here he's asking his followers about strengthening of the COVID restrictions in response to the discovery of the Omicron variant. And the biggest response by far was to end all restrictions despite the new variant. And Goldman published this effective lockdown index, which shows the severity of lockdowns on economic activity. And you can see the severity of those lockdowns has been smaller with each new variant, as we went from Alpha to Delta, and then as Delta spread outside India. Now, in terms of inflation, the Federal Reserve Chairman, Jay Powell, has actually come out and said that Omicron may cause potentially a problem with inflation. So it could create downside risks to employment, but also reduce economic activity. But usually the greatest economic impact comes from people being reluctant to go to work for fear of catching the new variant. So in theory, this could extend this period of supply chain disruptions. And certainly that's a view that's shared by certain pundits, such as Jim Bianco of Bianco Research, whose opinion I respect, who thinks it's not a great time to buy equity because of further supply chain disruptions. But I think what's interesting is to think about the end game for this pandemic, and it helps to look at what happened in a previous pandemic in 1918. So this figure beside me shows how that flu epidemic mutated into a more benign form. So some forms of the virus became extinct. You can see that happened to H1N1 and it happened to H2N2, but then the variant called H3N2 went on to mutate into seasonal flu. And that may be what happens this time around as well. So it's still very early days for this new variant. We're going to have to watch what happens with the biology to monitor whether existing vaccines are effective against it, but also whether it creates more severe disease or more mild disease. But I think it's fair to say that markets have overreacted. They've assumed the worst, and that you probably shouldn't. Remember, when markets sell off, it's a buying opportunity, not a selling opportunity. Now remember our previous Patreon offer. We'd love to have you on board, and as always, Thank you for listening.